It's really important that if you've been given the gift of the biggest macro opportunity of all time, that really you don't mess the whole thing up by doing stupid stuff.
You've got, I just said, $100 trillion that's now available that wasn't before. And the more the price goes up, the more FOMO, this and that. What's important for me now is that the value is getting really big. And of course, as you know, I call my first funds 10T, 10 trillion, because I think that's where in 2019, when the space was 300 billion, I said, okay, well, the value of all the cryptocurrencies and the value of all the equity is 300 billion. And my target over the next 5 to 10 years, conservatively, would be 10 trillion.
On Friday, Bitcoin, the world's largest cryptocurrency by market cap, hit a new all-time high of $70,184 per coin, surpassing its previous all-time high of $69,210, which was reached earlier this week on Tuesday. To say this has been a most eventful week for Bitcoin would be a gross understatement. It has been a great record-breaking week for the leading digital asset. This is the first time in its history that Bitcoin's price hit a new all-time high before the halving event, and we did it twice in 1 week. The climb above $70,000 gave Bitcoin a 34.9% price appreciation in 2 weeks and 60.5% over the preceding month. And there is still so much more to come. This is why Real Vision founder and CEO Raoul is so extremely bullish on crypto asset prices in 2024 and beyond. According to Pal, a renowned investor, macro analyst, and former Goldman Sachs executive, the cryptocurrency industry presents a rare opportunity for investors to make money, not just a few thousand here, a few hundred there, but life-changing money that can save you from the very gloomy global economics and help you create generational wealth. Plus, this is not just a rare opportunity. It is one that is strictly unique to cryptocurrencies and other digital assets. Pal's short and long-term views on cryptocurrencies are extremely bullish. Pal is certain that the industry will grow by 10x to $10 trillion within the next few years and almost straight up to $200 trillion from there. And he is not the only one with such ultra-bullish predictions. Dan Tapiero is the CEO and managing partner of 10T Holdings, which represents Tapiero's predictions that the crypto market will hit $10 trillion within the next few years. As we bring you clips from recent interviews with both of these brilliant investors and crypto enthusiasts, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also join the conversation by dropping your comments and observations in the comments section below. Everything you do is genuinely appreciated. With that said, let's dive right in.
One of the things that I've searched for in my investing life, which I think many of you have, is the answer of how you can change your life. Because we don't just invest for the fun of it. We invest because we want that future vision of ourselves to be met. Now, sometimes we don't get there, but it's a really important thing because if not, you kind of feel like you've let yourself down. And in this world, when I started my career, life was a lot easier. The 90s were a great time to be in markets. There was limited volatility when they were. It was a crisis that was kind of tradable, like the Asian crisis. Then we had the dot-com bubble. These were kind of big macro events where you could really make some returns. If I came out of the hedge fund industry, and people made big returns over that period of time. But after that, returns got crushed on everything, particularly after 2008. Just how bank regulations changed the nature of risk-taking, what people were able to invest in, and the expected returns as GDP growth, trend rates came down across the world, as rates came down. And what you found is suddenly the expected returns out of stuff like the stock market just weren't good enough. And it's become a problem for all of us, is the cost of many things has gone up, particularly assets. But our wages generally haven't gone up anywhere near as much. Just look at the houses around you. The one you were trying to buy that doubled in price. But your salary hasn't gone up. And that's all part of this whole idea about how fucked up our future has become because of this demographic issue and the debt issues of the past. Those have now clogged up the economy and ruined all of our opportunity sets. And we all have to find a way to figure this out. But I found one thing above all others really unfucked my future, and that was crypto. I've talked about the value of having an income and the value of businesses and those kind of things, and how to have lifestyle goals, and that lifestyle is the ultimate bank. But you also want the opportunity to get ahead, to start beating the game a bit. And crypto was the thing that really unfucked my future. And it's unfucking many of your future now, as long as you don't, sorry to swear so much, this up. It's really important that if you've been given the gift of the biggest macro opportunity of all time, that really you don't mess the whole thing up by doing stupid stuff. And again, it's like hold 80 or 90% in your core major positions. Those should be in the top 5 tokens only. Then have a DJ bad where you want to trade FOMO, meme coins, or whatever you want, NFTs. You can do that, but not with the main part of your portfolio. There's plenty of returns to be made without taking the risk for that 100x. Those things don't come along often, and very few people nail them. But crypto really is the biggest opportunity. It dwarfs everything else in risk-adjusted returns. And that, for me, was the big unlock.
Pal believes a global economic reset happened in 2008, with the world's major economies realizing that the two most important factors for GDP growth, demographic and productivity growth, are either flat or declining. Yet, debts have kept piling up, hitting 100% of GDP for most of these economies at different points since then. With the world's economies now approaching a critical phase due to unchecked money printing by central banks, Pal says the only way out of the GDP disaster is to increase productivity growth. This is where crypto, technology, and the exponential age come in, and why the macro analyst is so bullish on these two important asset classes. Dan Tapiero is just as bullish on these assets, especially cryptocurrencies, for pretty much the same reasons. According to Dan, the 10T in his 10T holdings represents $10 trillion, which is his conservative prediction for the digital asset space in the very near future. He made this prediction several years ago when the industry's market capitalization was only a paltry $300 billion. During a recent interview with Blockworks Macro, he revisits his $10 trillion prediction and talks in depth about where we are currently in the cycle.
Look, last time in the peak in 17 was 20,000. When we broke that, we went up to 60. The new high was, or call it 69. I don't care. We just call it 60. So now we just broke 60. We can go to 180. That's 3 times. And why is that? That's not crazy. So I think, 150, 180, I think that's a pretty, if you want to be a little more conservative and say 120, that just means Bitcoin's going to double from here. I don't think that's such a big deal for Bitcoin holders. What's important for me now is that the value is getting really big. And of course, as you know, I called my first funds 10T, 10 trillion, because I think that's where in 2019, when the space was 300 billion, I said, okay, well, the value of all the cryptocurrencies and the value of all the equity is 300 billion. And my target over the next 5 to 10 years, conservatively, would be 10 trillion, which is a 30x. And I thought to myself, no one in the traditional world or nobody I know is going to believe that that was actually my view, right? So I'll just put that into the name of my fund and there it'll be cemented, right? I still think there are huge gains to be made here. So when I talk about the value, Bitcoin going from 60 to 120, ETH going from 3,500 to 10,000, you're talking about the entire value of this digital asset ecosystem, being worth north of $10 trillion. And I think that's at a point where it really is here, right? It's arrived. At 10 trillion, it's arrived. And then people from the old world who were not interested when I was talking to them in 2019 and 20, and, for a moment, maybe in 21, they were interested, but then again in 22, 23, it was all fraud and this and that. I think up at 10 trillion, there's enough dollars, there's enough value and enough people, and network effect has been created that people really start to do deeper dive, right, into the space. I don't see anything really different. As I said, we broke the high. You can just very easily say, okay, it can go to 150, 180,000. But realistically, I think the cycle is the 10T cycle by 2025, 26. I think 18 to 24 months. Now it could happen much quicker. And I always like to give myself like cushion to be wrong about the price, give myself more time. So I think that's really reasonable. The max case, I mean, could we get to 300,000, 350? Certainly possible. Yeah. I don't think this cycle we get more than 300, 350. I think that's probably a bridge too far. I think that's when people would be like, well, this has run too much. It may be worth that, by 2030, but I think it'll be too much and people will have too much embedded gain. So the only supply, I said before, there's no supply response. The only supply that can come to the market are people who decide they want to sell because now they have money to buy that house for their, that they've been wanting to buy, or buy that car, or so people will trade their Bitcoin in for material things.
Over the past few decades, the S&P index has appreciated significantly, but it has hardly increased in real terms because the dollar is getting rapidly debased. Despite this anomaly, it's still much more difficult for the average American to purchase it now than it was 3 or 4 decades ago. The same can be said for all other asset classes, including real estate. Younger generations are working multiple jobs and are still unable to afford the things their parents could easily afford a few decades ago. This is because, in real terms, wages haven't gone up since 1972. As a result, it's financial suicide to just rely on one's wages to grow wealth instead of buying assets. And not just any assets, because assets like bonds, for instance, will make you even poorer. You need assets that can and have outperformed the rate of currency debasement. What are your thoughts on Pals and Tapiero's interview? Please drop your comments and observations in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.